Hello everyone and welcome back to another talk video. This specific reason I'm making this video is because I understand there's a lot of people interested in diving into the crypto market as a trader specifically, whether you're a day trader or a swing trader, it doesn't matter. But there is a lot of attention and it's growing. So I want to make a video kind of explaining to you guys my experience so far with trading crypto. I've been trading, for example, Bitcoin specifically since 2020. So it's been 5 years now. And I want to give you guys a lot of the things that I've learned, maybe a lot of the things that I recommend you guys should look out for, things to keep in mind as a trader, and then some recommendations and so on. So we'll dive into all that in just a moment here. So I'm going to share with you guys my chart right now. So I have here TradingView. Does a really good job at letting you use so many tools to analyze your um your trades and your charts. I understand a lot of you may already be familiar with TradingView, but if you're not, it's something to maybe check out. It kind of helps keep things separate and from your actual trades, analyze things a little bit, and then kind of, and usually it tends to be a better place to analyze your trades than a lot of exchanges if they don't offer TradingView built within it already. But basically, um, I guess we can start off with first like some exchanges and all that, right? So like if you guys go usually on um, Google and you look up crypto exchanges or crypto trading exchanges, it doesn't really matter. I think there should be some articles that go over like top picks or something like that. Uh, this one by CoinGecko should be fine. So there's like Binance, and if you're in the US, it's recommended Binance.us. There's Bybit, Coinbase Exchange. I have most of my experience in Coinbase, and then so on. Right, Kraken is very much a popular one. All of these are popular, but Kraken is it's quite popular, just like Coinbase. BitUnix is growing in my opinion, but there's so many different exchanges, right? So the first thing I would say for anyone that's getting interested in crypto to trade is first look at what your exchanges offer when in terms of fees, right? Because if you're going to be trading spot Bitcoin, you got to deal with fees. And even though, from my experience, because I also use Binance.us for my own personal experience, it says if you're in the US and you trade um, like USDC or USDT against Bitcoin, it's all fee free. And from my experience, I've been paying fees and I really don't understand why. But it's super small. Even the fees I've been paying on Binance.us are very small compared to like Coinbase. Although Coinbase on their advanced like section, if you make an account, you don't have to make an additional account. You make an account, and there's like an advanced trading section you turn on, and it takes you into like a more detailed chart. And it the fees have been dropping quite a lot too, so it's becoming competitive as well. So far, Binance.us has a good um, competition when it comes to fees. But then you also have to look at their style. So all of these crypto exchanges tend to have a similar overall style with their platform when you're actually in there to trade. But it just depends on your preference, just your own visual preference, something that really settles with you. I know a lot of people will prefer the way Kraken looks like over Binance, and you know Coinbase over BitGet and Big over Coinbase. It doesn't matter. So it's just going into each website. If you go to each website, it doesn't really matter. Like you can even go to like BitUnix or any exchange, and there's usually always a spot. If you go to spot, I think spot orders should show up. You can usually check out what their exchange is going to look like before you're making an account. So this is something you guys can all dive into and check out. And then it also comes to trustworthiness. So far in the US, a lot of like for example the US based exchanges, and there's a lot plenty outside the US, but I have no experience with them. But inside the US, pretty much every US based exchange has really good security. So security isn't really something that's too crazy to like you should be looking out for. Chances are they're all gonna be fine, especially if you're just trading. It's not like you're gonna be holding your funds in there, your crypto in there for long term. Um, and usually all these exchanges you can verify with them. A lot of the exchanges have USD insurance to take care of your cash when it's not invested. It's usually usually all the all the US exchanges have that, but you can verify yourself if once you find an exchange that kind of resembles your style, that your style preference. But let's get into like the actual trading aspect of crypto, and I'm gonna be specifically going over Bitcoin. You could, you can match this up with a lot of stuff on, like, for example, Ethereum, or if you guys want to check out Solana and a ton of other cryptos. And I should say that if you guys are planning to trade a lot of meme coins or a lot of these smaller cap coins, which is completely fine, and a lot of them provide some really, really, really good moves and trade setups within them, and they're definitely worth giving a shot, and keeping your eyes open for a bunch of different opportunities. But a lot of exchanges, for example, I primarily use Coinbase, and usually a lot of these meme coins, although they have plenty, a lot of them don't get listed on there right away. So you may see like a hot coin on like the media or whatever, social media or YouTube, and you may not find it on Coinbase. So it's important to look at, and it's researchable, what exchanges usually get these more fresh, smaller cap coins sooner than others, right? So it's something to keep an eye on. But if you're trying to trade, like what I pretty much mostly do, I trade larger cap coins like Bitcoin primarily. And if you guys are familiar with my channel, I focus on Bitcoin a lot. You're gonna notice things, and it kind of translates to a lot of other cryptos. But I'm gonna go over here. There's too much stuff on here. Maybe I'll jump back in there in a moment. We'll use the Bitcoin against USDT chart, and USDT is just like US dollars, but it's a crypto that represents US dollars, and it has a pretty reputation for really good reputation for like uh, having large amount of volume, being able to get in and out of it pretty quickly, and it being a secure, much more like secured blockchain. Um, so like a lot of people like to trade with USDT. Usually, sometimes they'll get a better deal with fees, or they like to swap from in and out of different exchanges, and they'll transfer their USDT. And usually, sometimes it tends to be faster than just regular dollars, and it tends to be lower fees than swapping other cryptos back and forth. But when it comes to like actually trading Bitcoin, right? And this is how everything I'm going to say here is just my own opinion, is how I approach things. I'm not telling anyone what to do. I'm not telling anyone, um, how they should do things, because trading is so unique. And everything I say is just again, my own personal opinion. It's not financial advice, guys. So just keep that in mind. I'm not a licensed professional or anything like that. But you'll notice that if you do research, if you haven't already, Bitcoin has these like bull cycles and has these bear cycles, and within these cycles, you usually see aggressive moves to either side depending what cycle you're on right now. So right now we are currently in a bull cycle, and within this bull cycle, so here's a better way of explaining it. So I like to use the 120 moving average. It's just my preference. I like to keep my charts pretty simple, and I'm not gonna go over each indicator or anything, because maybe good for a separate video. I'm just going off of the difference between trading crypto and other things. Usually, you'll notice uh, things play out a bit differently. And as you take a look at Bitcoin right here, for example, right? So we have a bull cycle, usually lasts a while, and then a bear cycle tends to last usually not as long, but very aggressive move down, just like you see an aggressive move up. And within these cycles, right, you have to take a look, and it's like, for example, unlike here we were in a pretty much, it was an easier interest rate environment. Usually rates were dropping. You had a lot of suffering in the economy. So this was also backed by interest rates kind of dropping a bit. And since this is a very much a growth asset, you'll notice that usually when there's fear in the market, you'll see like bonds, and like, for example, the DXY here with USD, the dollar index, US dollar index, I should say, tends to go up. And then when you usually have more fear, not fear, more risk on environment where there's less fear and a lot more aggressive buying, you'll notice the US dollar drops. and the way this correlates with Bitcoin, and it's just something to keep an eye on. I don't usually always trade with this, but I tend to look at it as an indicator, right? So if you take a look, for example, let's see how I can explain this. So if you take a look at Bitcoin, right, and we're in this environment right now where Bitcoin is looking very good. Usually these bull cycles last till usually around October to November, and we usually continue to see aggressive upsides from there within these bull cycles. Just like we've seen back here previously, you're going to have like these aggressive double-digit percentage drops, and there's always things to look out for, right? So I think it's better if I jump over here. You'll notice that within all of these aggressive moves up, you'll have times of consolidation, just like similar to a lot of other growth assets and tech stocks, but you'll have long periods of consolidation. And within these periods, you need to understand that, well, I'm gonna get into more detail in a moment, but like, it's all supply and demand based. So unlike a lot of stocks and a lot of other tradable assets that pretty much we all have access to, Bitcoin is mostly involved with supply and demand. So during this time right here, there's always been good news. There's always been a lot of fear missing out, but the price kept dropping after rising a lot. So if you see, for example, in Bitcoin in a bull cycle, if you see these like sideways movement kind of weakness where you see these like lower lows and lower highs forming, you need to understand like, well, what is, and this is researchable too. You guys can look this up as you're trading, but you can look at the supply of Bitcoin, and if it's dropping, and if it's dropping, you can also see how much more. So all these like crypto addresses is basically where people and institutions hold their crypto, and they're all public information. You can see when they are adding more. You can see when there's big transactions being made. So like in a bull cycle, after the price rising up a bit, you're gonna notice that, well, the supply is going down. There's more buying going on in the background. This sideways movement, sort of downward, and I was also making videos on this as it was happening. It may just be temporary consolidation, because there's two forms of consolidation. This is true for pretty much every market, where there's time consolidation and price consolidation. So the way I translate that is, or define it, is this is more of a sideways consolidation. So unlike previous times where like more like let me see if I can find a good example. Yeah, so right here, this dip down, if you guys can see that, I'm gonna trying to see if I can show it to you guys a little bit better. We had the wick of this candle came up to right here where the white line is, and then it had a correction that began. This corrective structure was more price based because it had an aggressive move down where the asset came down over 15% in a very, very short period of time. This lasted like 2 to 3 weeks, which seems like a lot of time, but it's really not, at least in this market. So when you have price come down aggressively like this, and I'm going to start getting a little bit more technical here, it starts meeting previous swing lows that have also been acting as higher highs, and it's a lot more easier. I'm going to show you guys a previous one that's easier to look at on these weekly candles. But the price comes down aggressively in a short period of time. So then it quickly usually recovers. You'll notice that a lot of times the price will recover very quickly and ended up making another high from this wick right here. So you have that as price consolidation. Time consolidation is more like this, where the overall, and we're kind of seeing that a little bit now, but within these structures, you have a lot of price consolidation, where it's a quick dip, quick recovery, and it fills in those gaps. And then with time consolidation, you'll notice that price will move sort of sideways for a while. We had a big structure right here of sideways movement where there's not a big drop, but the price is trying to factor in a big move by not making the price much lower, but instead trying to fill in the gap by letting price stabilize with time. And we're starting to see that a little bit right here too. I'm going to get into that in just a moment. But within all of these structures, you're going to notice that pullbacks tend to come down to what I call, a lot of people use these as well for all kinds, even in Forex, you'll notice a lot of Forex traders use these more often than I think commodities traders will and stock traders will. But it's still valid in a lot of markets. But since this is mostly tied to usually the broad economy and some governments, Bitcoin is tied a lot to supply and demand. Like I said earlier, you'll notice imbalance fill. So imbalance is when there's 3 candles and the middle candle stretches out a gap from the bottom of one candle and the top of the other. So in this case, the top of this candle creates a big gap that is seen. I'm going to show you guys right now. So I use these a lot, and I'm going to show you guys some examples, some recent examples that I have. But it comes down, it goes up all the way to the bottom of this wick. This creates an imbalance. What you'll notice is that usually, like pretty much just about all the time, imbalances tend to be filled within corrective moves, rather the price is coming down or up. So you'll notice that right here, there's a very clear imbalance. There was another one down here, but that's going to go into the future. So first imbalance, the price came down and found support within that gap. So these tend to act as support or resistances leading into the future. Again, depending if you're coming down or up, whatever structure you're in. It's also true within bear market environments in Bitcoin. So it got filled right here. And then we had a move higher. Now it never topped out this previous wick, so indicating there's not enough bullish momentum. We can see the price come down and potentially retest this as another support area. If you started using this as another support area, you would then notice that, you know, it was a great time to accumulate. Once again, if you came up, you start seeing weakness, like the weekly candles or daily candles start to stabilize too much. And then also the RSI down here, which I really like to use. So the RSI maxed out a lot. So it was, it was maxing out constantly, very, very much, indicating a potential top. It came down and then it came back up, maxing out that RSI one more time, maxing it out, weakening also if you're using daily, weekly, or multi-day candles or whatever. You'll notice a lot of volume changes. Within this time, the volume for Bitcoin also begins to reset by seeing a big drop, indicating that there's a shift of momentum. So this place got filled, came back down, great opportunity to buy again, and it came back up. Now, since the price came back up, you should already, and it's good practice to always start having resistance lines for potential tops in case this is going to continue a lower high structure. In this case, if you would draw this out, you'll notice that it starts mixing, kind of flirting with the resistance line. Great indication to start selling. Also, usually as a preset, the RSI 14 close SMA, it gives you, and this is a preset by TradingView, and I like to use it. It works very well for me. I don't have to modify it. But this previous high, besides it reaching the resistance that you would have already had drawn once you saw it max out and the price came down, you would already had that drawn. The moving average starts acting as resistance up here as well. So another indication that, hey, maybe it's a good idea to start shaving some positions off, because we did have a big move up. Resistances are forming, and the RSI is also showing that with this big move down, it never bottomed out the RSI either, indicating discounted levels. So maybe it was a good idea to maybe start shaving some positions so you can have more capital available. If the price comes down. If it doesn't, it goes up, cool, you can hold on to it, and then maybe potentially it could have reached the first swing high resistance, which it would have, it's a yellow line, something to keep an eye on. So it was like a first level selling and then another take profit area as well. What ended up happening was it came down, of course, and we had a lower low from here. So starting from here to here, indicating that if you were to keep track of this as well as it happened, it would have been a good idea to start selling at that line. Ended up finding support shortly just after breaking below that, which this also starts flirting with some more imbalance right here. I don't like to the definition of imbalanced candles is only 3 candles, but I disagree. It depends on your time frame. If you're looking at this on like a 2-week candles or monthly candles or whatever, you got to keep swapping back and forth. But I would say it's still valid. If you, especially if you're using like 1 hour candles, 1 hour candles usually an overlap of just like this, where instead of just 3 candles, maybe you have 4 candles. It still creates valid, and I'm gonna show you guys an example. It still shows valid imbalance. If you were looking at a daily candle, even by looking at an hourly or 2 hourly. I'm gonna show you guys an example of that in a moment. And in this case, it would have been equivalent to like by 2-week candles, or even up to um, a 1 month candle. But this acts as an imbalance. So here's the previous swing low, candle low, and then the candle high right here. And then it came down into this gap right here. It came into it, broke into it, found, and then started going back higher. At this point right here, there really, especially on the, if you're looking at the 1 week candles, there's no imbalance. So it's time to wait. It's time to see if there's gonna be a change of structure. Let the price do its thing. It came up, started showing weakness, resistance on the RSI right here on the moving average, and then it came back down. In this case, when it came back down, it created a higher low, and then waiting on it, seeing if it's gonna pump up back higher, because this could have easily kept the downtrend going. This could have broken down more and gotten closer to the 120 moving average, but it didn't. So that's why it's important to let structures play out after, getting some pretty clear setups, letting it play out. And at this point, I made a lot of video on this, so I captured all this live. But I saw this higher low form, and we came up higher and surpassed this swing high. So I had the green line. We surpassed it, indicating a higher high. At this point, I labeled this as a reversal zone, indicating that there is a potential of, and if you guys go back to like August and September of 2024, you'll see some videos I made on this. Maybe they'll explain things a little bit better. But in this case, I said, hey, it's most likely possible that we're having a change of structure, and the corrective sideways consolidation time has ended. So maybe it's a good idea to start being a little bit more aggressive on your positions. And even before we hit this third dip into the purple area, I had this purple area drawn out, and I kept saying, even from here leading all the way forward, I kept saying any dips inside this purple area is a strong buying opportunity, because after we had that more aggressive dip, I drew out this supportive line. It's been there for a while. And then we ended up finding support a little bit up here, and then we started moving up higher. So we had to break a structure. Now with a little bit of a closer, I'm gonna make more videos on this because I feel like I'm being a little too quick, or I'm just not making too much sense. But for example, some of those imbalances, very clearly we saw some of those forming right here. So we had an imbalance here. I'm gonna get closer. We had an imbalance form right here, a very clear one, textbook clear imbalance. Price came up. So what this white area is that within moves in cryptos, especially in Bitcoin, it's a good idea to use a simple fib retracement. And fib retracements, I like to use, as you guys can see, the 0.618, 0.5, 0.35, and with extensions, I use these, the 1.618. I always forget here. Let's see. 1.38, 1.236, and then the just the 100, which is represented by 1. I use these because after plenty of time, and just the way I trade, just the way I develop my own trades, I noticed that I tend to focus a lot within these specific structures. So if you were to open these up, you can modify them, but I use them just like this because they make the most sense to me and it fits my style. So for you guys, it may be different. So I drew it from here. So if I had this, I've been making videos on this as it happens. I make videos on it, and I live stream. So I do it all just as it's happening. And then I leave it here to look at notes in the future, look back and see how I used to trade. But I started from the top of this dip, right? So the top here, and then the bottom, at the time it was over here. So what I ended up doing was any dip below previous support, I wouldn't modify the retracement area, and instead I would leave it and see if we can near any potential fib supportive extension areas that I draw. So I usually draw these by taking through 3 wave corrective structures, and then it forms these extension areas. As this is how I do. I'm not going to get into it too much because not everyone likes to use fib extensions, and I know that. So I want to just explain why I have it, and then if it's something you guys like, practice more with it. But we ended up coming up and finding resistance at the top of it. It broke up a little bit, but never closed above it, especially on the 1 hour candles. And then we ended up using that as a resistance, coming back down, finding support within the imbalance areas. So with Bitcoin, I noticed that imbalance areas are very, very important. That's something I want a lot of you to keep an eye on. And so we start moving up higher, right? We use this as a resistance, but then we start using it as a support. We come up even higher after that. So during this time, we were watching the interest rate announcement, and it was quite dovish. So we came up into this orange area. So this fib extension area, as an example, it was created by taking, let me see if I can show you guys. Where did I have I need to see where I had the points drawn out. Was a little bit ago. Okay, cool, right here. So I'm going to show you guys right now. Wait, where's the top one? Oh, it's all the way there. Okay. So I drew this out, and the way I did this, so I can give you guys a little bit of understanding, was this wave structure right here. So we came down and we started confirming a higher low scenario, and then we came up and we created this other higher low. But during this time, as backup, I created, so once we found the low, I wanted to know how high we could potentially go in the future. So I took the base of this low, which right here, I drew it here because it stretches out. So I like to put it further up a little bit. Actually, I should be able to show you if I bring it back. As you guys can see, it starts down here, bring it all the way up to the high of the swing high. And then I close it down by bringing it back down to the low of the next dip. So by doing that, it gives you a potential area to keep an eye on in the future. I'm going to bring it back. It gives you an area to look at into the future. So after finding support in the imbalance area, we started coming up higher, respecting the retracement area, and then maximizing this area perfectly. So by considering, if you're trading Bitcoin, guys, if you consider fib extensions when you're taking in a structure that you believe may be a change of structure. So we had a big move down, right? This move wiped out this swing low, and it wiped out this swing low and this one too. So that was obviously a break of structure to the downside. But since it happened so quickly, I consider this to be a more of a price consolidation instead of a time consolidation, because it was so aggressive. So I believe the move higher will be sooner rather than consolidating for a while, because it wants to try to fill in these gaps very well. And if you guys noticed, this high, and that wasn't just represented by the fib retracement, but it also had imbalance right here. So as you can see, very, very clear imbalance in this area, and the price came up to it perfectly. So the reason this matters is because look, one candle here, one candle here. The wick of this candle and the bottom wick of this candle creates a gap within this candle, tends to act as a magnet, just like it happened here. So within this extension area, and you're like, okay, well, we have interest rate announcement coming up soon. Now with this low, I created a support line, and I'm like, all right, well, I wouldn't be surprised if we come up higher. We ended up coming higher, but not surpassing this area. Once we started dipping lower, it looked very, very weak in my opinion. Also, this move higher, and this is why it's very important to use RSIs in my opinion, never maxed out the top range. So after coming down, pretty much maxing out the bottom, and maxing out the bottom a lot right here, we haven't seen it max out the top at all. So at the time, and I believe I traded this live too during a live stream. So this was like in late January. The live stream should still be there. Wait, no. Yeah, late January. It was like January 29th or 30th. I'm pretty sure it was 29th. I ended up capturing a move down here because after the RSI not maxing out right here, coming down and finding support down here, we pushed up higher. It never maxed it out completely, and although it's valid to say that it did hit this area a little bit, and that's enough for the price to come down. At the same time, I noticed that the price came up higher, broke past the 120 moving average, and at the same time had enough momentum behind it, because every time, at least from my experience, that prices tend to hit a fib extension area, it usually attempts to maximizes it, and at a minimum, it usually attempts to hit the more average gap right in the middle. So we've seen that previously a lot before. So I'm going to show you guys what I mean. It happened right here to the downside, an extension area. It came down, hit it a little bit, rejected. I'm going to get a little closer. It hit it right here, rejected. But since we had enough momentum to even hit it, I was like, okay, well, it could potentially dip into a bit more. And it did. It came into it right here. So it came up. It came into a lot more into the average area. And then the retracement area right here, which was represented, there's the dot down here. So I'm going to show you guys. So this whole move down, the dot's right there, and the other dot is at the top of this one. So swing high, swing low creates this retracement area, and within this retracement area, I kept using it as a resistance. So after coming down into the average area, which was a great time to begin accumulating, we came up and we kept getting rejected, because right here, look, see, the retracement area acts as a perfect resistance and support depending on what direction. So it came up, got rejected at the 0.5 line at 95.9K, came back down, and it kept trying to act as support, but every time it would push higher, it would be low volume. And when it finally had a bigger rise, it wasn't enough to even reach the 0.5. So again, I couldn't have confirmation that we're going to start moving higher, because we couldn't even break above this retracement area. So now we finally hit the 0.5 and got rejected perfectly, and we came back down. Now we maximized the extension area. After maximizing the extension area, then we started breaking up higher, and this time we passed the 0.5, came back down, couldn't break below it too much without getting rejected or without closing any significant like multi-candle close below it. So we ended up breaking higher. Enough momentum to hit the 0.618 at the top. So then it eventually just broke over it, and then again, it acted as support in the future. So these areas tend to act support and resistances going forward as well. Another example will be right here. So here's an extension area, which is what I'm looking for up here in the future. So over here with Bitcoin, we got a little bit of structures to look at, but then eventually I have another extension up here that I'm keeping an eye on. We had enough momentum to hit it. If we have enough momentum to hit it, we will eventually soon enough hit it shortly after, right? So it hit the area, and I'm waiting on clear evidence. And right here, the evidence was the RSI. So after maxing out the RSI at there, it got rejected and it came back down. After falling down here, I began purchasing, because I'm like, okay, well, the RSI is now bottomed out. We don't have any super clear imbalance, because imbalance here, so I'm gonna get closer. Imbalance here was filled with this wick. So I'm like, all right, well, I don't think we need imbalance, because this wick filled in the imbalance right here, and we came back down and we found support at that wick down here. We found support. So I took a trade and we started going up higher. The moment the RSI starts going over the 50 line and attempting to max out the RSI, while we're at the lower price than we were before. So if you guys take a look, we maxed out the RSI here. We kept trading a little higher as it's dipping, also indicating signs of lowering volume, and maybe it's time to lock in a bit of profits, because there may be a dip. We got close to it, got rejected, we got close to it, we hit it though. So that was one reason I began buying down here once you reached the previous swing low, and the RSI started bottoming out, and it started going up higher. We attempted to max it out, but we're right here at the 59.41 line. And we're maxing out a lot shorter than, this wick up here. So it looks like there is weakness in it. I didn't sell though. I did not sell, and I kept holding because I wanted to see it max out. So I kind of went against that. Instead, we came down aggressively. The moment we came down aggressively, I was getting excited, because if we have enough momentum to reach a specific area, even briefly, then we will have enough momentum to reach it in the future. So after coming down and it bottoming out, coming down, causing the RSI to bottom out one more time down here, I began to accumulate once again. We ended up breaking higher. So the next move up, imbalance right here, wick filled it. So it got filled. And then we had more imbalance down here. It got filled here. So it's a back and forth kind of thing. It goes up, fills in any clear imbalance, usually acts as resistance at this point because we're trying to move higher. It came back down. Great buying opportunity would be previous imbalance wicks right here. So we had more, but the first one right here was here, and then we had a second one right here. Great time to begin buying. We ended up going higher. I didn't sell just yet. I kept holding because it was just a couple days. Nothing. I've been holding on to this for a while. We got rejected there. I ended up continuing to wait as the price keeps fluctuating. It came back down and we surpassed this previous one right here. Then as the price gets rejected more, lowering its volume and begin to show weakness. Previous swing high right here couldn't hit this one, got rejected. Ended up creating new swing lows. So these swing lows ended up basically filling in these previous imbalances. So it tried using this one to find support, and it sort of did. It pushed up a little higher, ended up getting rejected by 120. So I respect the 120 a lot. And I'm going to show you guys an example of that in a moment in the future, going into the future here a little bit. And then we had one more wick down. This wick filled in the imbalance right here perfectly. So I started accumulating again. Also, this wick, previous swing high, right? So there was two levels of reasons to buy there besides the RSI being maxed out to the bottom side. Finally, we broke up higher. Once we reached the medium area, it didn't take long for it to reach it. It was a good idea to begin selling. I think I sold all my position at the time, and we ended up quickly getting rejected and coming all the way back down here, right? And again, if we have a big price consolidation instead of it being time oriented, great reason to take advantage of it, right? Ended up coming back up. I missed out on it though. I didn't take this trade. We ended up coming back up and couldn't reach the area, so we got rejected and started going down lower. At the point, I had some supportive areas already drawn out, and I started using these to buy. So I added here. It kept dipping in, and I added more. I kept holding because, we're not seeing any aggressive pullbacks. No reason to be super cautious. Then we started going up higher. I kept holding. We ended up coming down, and I using the previous swing low as a reason to buy. If the price kept coming down any lower, I would have used this supportive yellow line as another reason to buy. But instead, it came up higher, consolidates a little bit, and then finally maxes out the area. So what I'm trying to represent here is that fib extensions, even if this is the upside or the downside, as you can see, they always get filled pretty much all the time. So it got filled up here pretty perfectly, maxed out the whole range perfectly. Down here, maxed out the whole range perfectly. So it's just something to keep an eye on, right? And then this area, it was to the upside. I thought there was going to be a lot of resistance, but I wanted to see it maxed out. We ended up maxing out this area, and as you can see, it used it as support as well. Another example, fib extension area right here. This is a very clear one. We hit it briefly. We had enough momentum to even reach it. If that's possible, then we should see eventually fill in completely. And instead, as you guys can see, 70.7K got filled and just skyrocketed through it really, really well. A more near-term example is, here's another extension, right? So I didn't have anything for the upside. The structure was too unclear, and I honestly didn't think this overshooting B wave was going to happen, but it happened. We ended up coming down as a corrective move. As you guys can see, this fib extension area got filled very, very well. And then my last example of fib extension areas is right here. This one got filled super, super well. And I capture all these on videos and make updates about it. And I caught this during the live stream too. And as you guys can see, it filled it completely. So I wouldn't be surprised if we slowly keep consolidating a little bit and work our way higher towards this next fib extension area, and then eventually fill in an imbalance we have right here that has not been filled in yet, to fill it in, continue consolidating, try to break past these resistance areas, so we can finally reach this next like leg up new high area for Bitcoin. And just like in previous patterns, I wouldn't be surprised if this area tested a little bit, gets rejected, tries to come down and find support. I can easily find support either here on these swing highs or right here. I wouldn't be surprised. And within this area right here where the previous swing highs are, I wouldn't be surprised if there's enough momentum up that creates more imbalances. And then we can use those imbalances as future support. So I guess if you guys are, just to summarize everything, if you guys are interested in trading crypto and, for example, Bitcoin specifically, um, I think it's a good idea to learn how to use fib retracements and fib extension tools because they tend to be filled a lot. They tend to be filled a lot. Just like in this one right here, this retracement area, I used it as, so we had this move down right here. We had this move down right here, and then we stretched up higher, right? After stretching up higher, I'm like, all right, well, is there potential support? Well, we have imbalance right here that the price came down. It came to it really well. It came down to it perfectly. And then basically if you overlap it, or if you try to draw retracement areas like this blue one from a move. So here's the move, here's that wick, and then I ended up drawing it all the way to the top one here, stretch it out, which was at the time it was this previous swing high. And I said I didn't grab this first jump up right here, but after it maxing out right here in the middle range area where there's usually a lot of value, it got rejected. I'm like, well, how far down can it go? So I just drew a simple retracement tool from a considerable swing low, because as we rise higher, we had enough of a low right here. It filled in imbalance right here, acted as support. So I'm like, I'm going to use this low as the starting point, and I'm going to use whatever the high was at the time, which was in this case right here. This was the high at the time. And I'm like, how low can it go? So I missed on the move up. It's showing weakness, RSI is slowing down. So I said, how low can go? Well, I'm using the retracement area as buy levels. So every time it hits it, that's one buy. If it keeps going lower, I'll use the next line as a buy, and then so on. In this case, it quickly jumped up real quick to try to max out this extension area in green, because as you guys can see, if we have enough momentum to test it, we eventually may have more momentum to max it out. So I don't overthink that. I don't think too much about it. If I see we have enough momentum, then I'm just gonna assume it's going to max out, because it usually tends to pretty much just about all the time. Going forward though, so yeah, these are just things that I feel like are very important for a lot of traders to keep an eye on. I do believe now, because we maxed this one out, we may see momentum start shifting, having a break of structure out of the sideways pattern and move higher. Now these these liquidity walls are researchable if you look up on Google. Bitcoin heat map. I really like using, I think it's called Glass, or it's like this. You go to Bitcoin heat map. CoinGlass. I tend to use CoinGlass a lot just because it's popular. It works well. I have no reason to question it. And then you can see all the major exchanges, and you can change like the time frame of it, and then you can see all these liquidity lines change throughout the day. So it's something to keep an eye on. So that's why, now with all this down here, the way it's forming, I'm looking at higher prices. So I guess just to sum up this video, because wow, I've been talking for like 45 minutes. Basically, to sum up this video, and it's the exact same opposite for the downside. So when we're in a bear market and you're expecting lower prices throughout that year, you do the same thing, but just working your way down. So you draw retracement areas on bigger pushes down when the money flow is going down on Bitcoin, and you use the same extension tools. So everything's the same, but you're just focused on going down, then it going up, right? So basically, yeah, guys, if you guys can pick a good exchange that fits your style, they're all good. If you look up top exchanges, just check out each exchange, see if it fits your style, and don't even question it too much. Look at the fees. If it fits your style and they're known to have good security, which is it's all researchable, and if you look up top crypto exchanges, they're all gonna be good and secured at the end of the day, right? Um, but once you pick a good exchange, it's a good idea to like zoom out. So like if you guys pick one and you're looking at Bitcoin for the first time, it's gonna look like this empty basically. You want to start noticing patterns. So like for example, if I was brand new right here, I'm like, okay, well, we came up a bit. There's some imbalance down here, so it's possible the price could come down to here. But there is a lot more. The supply is going down. Well, we're still in an uptrend overall. Um, and it looks like we're moving sideways, but we've been moving sideways for a bit now. We didn't have a quick recovery, or I mean, a quick drop. If we were gonna have a quick drop just to try to fill this in, it would have been more price based. We would have seen that happen sooner. But no, the price is going sideways. And it's holding quite strong. This swing low isn't lower than this one. It looks like there may be a momentum change. This swing high is higher than this, so we're still somewhat in an uptrend. So there's enough potential bullish pressure down here. And we went up, we came down, we went up, we came down. So we can most likely come up again. We continue to see a downtrend, but instead of like, there's some resistance right here. Take a look at that. There's some resistance there. We ended up breaking over it, and now we're trading above that downward resistance area. So, to me, it looks like, yeah, we could potentially go up higher. And oh, look at that. Look, there's some imbalance right here that could potentially act as a magnet. So, yeah, it makes sense that we can potentially go higher than lower. But we are still somewhat a little bit of a downtrend when it comes to this structure right here. So I'm going to go in light. See, it's like stuff like that. It's just taking your time, looking at the charts, taking your time, let things play out so you can get better understanding of what's going on. And I just really hope this video made sense, guys. Again, this is just how I approach trading Bitcoin. A lot of these can be factored into other cryptos like Ethereum. You guys can have a similar like view on Ethereum and continuing forward to like any other cryptos you guys want to trade. So this is a basic view on how I trade Bitcoin. Again, guys, hopefully it made sense, and I'll catch you guys soon. Take care.